Welcome to a beautiful snowy day here at the Blancolirio Global Headquarters. It's Thursday, January 29th, and what is going on with the stock market today? Today I'm going to dive into something that's way out of my wheelhouse here on YouTube, but if you've ever been the victim of a corporate bankruptcy, you know the implications of the story of what's going on in the stock market today. So let's jump into it and try to explain it. For years, many people have claimed the stock market's rigged. There's no way, it's only a way for rich people to get richer and the rest of us get hosed. Well, I never completely went along with that, but if you look at the history of hedge funds and hedge funds managers, there is some manipulation going on in the market that is not beneficial to the rest of us. And if you've gone through a bankruptcy before, you've seen how this happens. And what's going on in the market today is a populist revolt to what hedge managers have been doing for the last 20 or 30 years. A hedge fund is an investment group that allows very rich investors a place to invest their money, taking some high-risk investments, and it has a high bar for a level of entrance before you can get into this hedge fund. You got to have a lot of money to participate in this game. What hedge funds typically do is play the short game. With the COVID-19 pandemic going on right now, it is fundamentally changing the way our economics work around the world, and there's a lot of winners and a lot of losers. And what's losing in this new economy, or this change in the market, is things like brick and mortar stores and airlines, for example. What hedge fund managers can do to exploit these changes in the economy is short these different stocks that they think are going to be going out of business. And in so shorting these stocks, they can literally accelerate the demise of these companies. So real quick, how does a short work? You take 1,000 shares of a company that you think's going out of business at their current stock value is, say, $10. You buy 1,000 shares at $10 per share. That's $10,000. You borrow that for a set amount of time, say 30 days. On 30 days, there will be a call on your short, and you will have to repay what you've borrowed. You have to repay those 1,000 shares at whatever value they are at in 30 days in the future. You are betting that that stock is going down in value because you think it's one of these companies that's going to be eventually going out of business. 30 days later, that stock is only worth $1. You pay back, what, $1,000, and you pocket the $9,000. By the way, when you bought that 1,000 shares, you immediately sold it out there on the market, so you got the $10,000, and then you got to pay back in 30 days at $1 per share, $1,000, profiting $9,000. A very risky investment scheme. What happens if the price of the stock goes up instead of down? And this is what's happening in the market today. Retail investors like me and you, using more modern tools like investment forums, chat rooms, and apps that allow you to buy and sell stocks without commission over your phone, you guys can get together and you can find out when a major hedge fund has shorted a stock significantly. Instead of allowing the hedge fund to win on this short stock bet, you get together a group of your friends, a whole bunch of investors, you talk it up on the forum, and you go in there and buy that stock. Don't short it, but buy it and drive the price of that stock up. So what happens in 30 days? When the hedge funds got to return that investment, they got to pay the current value of that stock, the inflated value of that stock, and thus lose money. In some cases, the hedge fund has gotten so greedy that they've shorted more stocks of a particular stock than they're even available out there on the market. For example, GameStop that has been shorted something to the tune of 130 or 140%. There's not enough stocks out there to pay back the amount of shorts that the greedy hedge funds have taken out on this company. So the group of online investors that bought the stock see that stock price just continue to spring up like a spring-loaded accumulator on a hydraulic system. It's just bouncing up and up and up and up. But eventually, this Ponzi scheme, it's going to turn into a pyramid scheme, Ponzi scheme. The music's going to stop, and the whole thing's going to come crashing down. How's it going to end? And is this a powerful enough force to impact the rest of the market? And I think it is, and here's why. When the folks that are shorting the stock, the big hedge funds, have to repay their debt, they have to get that money from somewhere. Since that a lot of that money is coming out of the rest of the stock market. These hedge funds have other stocks available to them, other stocks that they're not shorting. They have to sell those stocks in order to cover their short bets. And that in turn drives down the price of the stocks that they are having to sell in order to cover their shorts. So to that end, it can affect the rest of the market. It's like a vortex that's going to end up sweeping in money from the rest of the market to pay for this short bet that the hedge funds are making, and the retail investor is driving up the price upon. All of this is incredibly risky investing. Eventually the music's going to stop. Somebody's going to get burned. Somebody's going to get left holding the bag. The price of the stock cannot continue upwards forever because why? The fundamentals of the company are not changing. So I hope that explains in 500 words or less of what's going on in the market today. Let me know what you think of what's going on out there. Are you involved with this activity today? It's all perfectly legal. There's no insider trading going on. If the big guys can do it, why can't the little guys do it? The debate is raging on right now. The SEC is looking into it. Let's see how this plays out. This could be a dangerous game, though. Is the market ultimately, the whole market a bit overheated right now? I think it is. I'm waiting. I'm a traditional slow time investor. Just buy and hold. But I've not seen any good buying opportunities in the whole market right now. I'm waiting for the price of the market to come down a bit to where I can continue investing in the market before I continue to invest for the long term. So like the typical dumb pilot move, I bought an airplane instead. Thanks for your interest. Thanks for your support of this channel. See you here.